In a recent update to the Voyager Digital Chapter 11 bankruptcy, the crypto exchange FTX and crypto company Alameda Ventures offered a joint deal for a partial buyout of Voyager Digital. Both FTX and Alameda Ventures are owned by crypto billionaire Sam Bankman-Fried, who had previously offered Voyager a loan to try and help it avoid bankruptcy. Voyager Digital has not accepted this potential deal from FTX yet, but if they do, Voyager customers will be able to receive early liquidity and access to some of their bankruptcy claims that Voyager owes to its customers. Let's take a look at the proposal that was issued by FTX and see the details of the proposed acquisition and what it would mean for Voyager customers. The first major thing to note is that this would only be a partial buyout of Voyager Digital. The offer notes that all Voyager Digital assets and digital asset loans would be acquired under the buyout proposal at their fair market value, except for the loans that were extended to Three Arrows Capital. This is important because Voyager lent $650 million to crypto hedge fund Three Arrows Capital. Three Arrows then went bankrupt since that loan that Voyager extended to them and defaulted on the $650 million debt. Three Arrows defaulting on that loan is a large part of what forced Voyager into bankruptcy itself. So the fact that this loan will not be acquired means that much of that loan could be a permanent loss for Voyager and their customers. It's pretty much guaranteed that Voyager will lose a significant portion of the $650 million loan that was given to Three Arrows, and there's a lot of doubt about how many assets will be recoverable from the bankrupt hedge fund. Because of this, the buyout offer isn't offering to take this $650 million loan because it's very unlikely that it can be recovered in full. This means that only part of Voyager's customers' asset claims would be returned under the partial buyout. For customers to recover any of the remaining shortfall created by the Three Arrows loan default, Voyager would independently need to pursue this recovery through bankruptcy proceedings with Three Arrows Capital outside of this buyout offer. So Voyager Digital is essentially on their own for recovering what they can of the $650 million loan, and how much of that is recovered will determine any additional assets that can be returned to Voyager's customers. So even if this buyout offer is accepted, Voyager Digital customers will want to be paying close attention to the bankruptcy proceedings relating to Three Arrows Capital and what assets end up being recovered from them, as it will directly affect any additional recovery customers will be able to get in the future. If the proposed buyout from FTX and Alameda was accepted, Voyager customers would be able to receive their portion of assets from the partial buyout in the form of cash that would be obtained by onboarding an account on FTX's crypto exchange. Upon creating an FTX account, Voyager customers could then immediately withdraw their recovered cash, or, if they choose, they could reinvest in digital assets on FTX. In order to entice Voyager customers to keep their cash on FTX's trading platform, instead of withdrawing the money right away, FTX is offering to waive all trading fees for these Voyager customers for the first month. Voyager customers are not required to participate in this process of creating an FTX account, but it would be the only way for Voyager customers to get access to an early distribution of their funds. While FTX is framing this buyout offer in terms of returning Voyager customers access to their assets partially, there's no denying that this buyout benefits FTX and has potential to be a savvy business move to increase their market share in the crypto exchange space. Due to the fact that the only way for Voyager customers to recover their assets early that are coming from this buyout offer is by creating an FTX account, FTX is basically ensuring that nearly all Voyager customers will create an FTX account with this plan. By then enticing these Voyager customers to stay on the platform by waiving trading fees for the first month, FTX is hoping to keep the new customers on their crypto platform and are essentially attempting to acquire Voyager's customers outright with this buyout and to spread their market share. FTX is requesting a response from Voyager Digital about their partial buyout offer by Tuesday, July 26th. If the offer is accepted by Voyager and approved, FTX is looking to close the deal quickly in early August of this year. What do you think about the potential Voyager Digital partial buyout from FTX? Are you in favor of Voyager accepting it and returning some assets back to customers earlier than would normally happen from Chapter 11 bankruptcy proceedings? Let me know your thoughts about the proposed deal, and be sure to subscribe to the channel for more finance content and news. Thanks.